All right. I've waited long enough. Let's get started. It's just going to be a quick class on bias, and then at the end, we'll go over the news for next week so that we're prepared for that. Um, but so what is class, or did I miss it? No, it's right now. Sorry, I don't know why I said that like you can hear me. So basically, the easy way I usually like to find the bias is simply just the 1 hour chart. Because I feel like the 1 hour chart, it's like in between the daily and the 4 hour, so it's not quite as broad. Like for an example, on the 4 hour chart, just because we inverse a 4 hour gap, right? When you zoom into the 1 hour, guarantee you there's a smaller gap within that 4 hour. So usually I like to use the 1 hour over the 4 hour just because um, it's a little bit more of a fine tuned look at it, I guess, which kind of leads into the next thing I like to do, right? Which would be okay, just because we inverse a 1 hour gap, right? Like, see how we got this 1 hour inverse? What do we all think? What do all of us think when we see this 1 hour inverse? Bullish? Yeah, right? Look for longs. We're bullish to these highs, probably, right? But the thing is, just because we inverse the 1 hour doesn't mean that there's not a smaller gap or a smaller time frame gap that could hold us down, right? So look, we inverse this 1 hour. Just because I see this 1 hour and I'm pretty confident, hey, we inverse the 1 hour, I'm bullish. The next thing I'm gonna do still is zoom in more, right? So when I zoom into the 15 minute, I see this gap, right? So now I can kind of even fine tune my my gaps for the bias even more. So yeah, we closed above the 1 hour, but look at the way this 15 minute held. See how we pushed up and held here, pull back, pushed up again, reject again, right? So it's not always just so simple and plain as like, oh, we inverse the 1 hour, we're gonna go to the highs, right? There's always gonna be a smaller time frame gap that we can reject from. So yes, my favorite is to use the 1 hour, but my next thing after that would be to zoom in and see if there's anything on the lower time frame, right? So now we inverse the 1 hour, yeah, but look at how gnarly this BPR is. So this could be something we easily reject from, but we don't notice that just staring at the 1 hour, right? So let's see. And honestly, you use this the same way on any time frame, right? So if I'm looking at short term price action and I'm staring at the 1 minute, it's the same thing. That's why our inverses work for our setups. It's the same as like, okay, well, we inverse this gap. You think we go up to the next liquidity, especially after sweeping liquidity. It's the same on the lower time frame as it is the higher time frame. So it's not super complicated, you know. It's pretty simple. Like I feel like most of the people in here don't really have a problem with this. We all took that long. Oh, I hope we all took that long. If you weren't done for the day, definitely that long was really nice. Had the 5 minute SMT way over here. Had everything on the checklist. So, is there actually anybody in here who does not? You guys don't struggle with this stuff, right? Like finding the bias is not. Yeah, finding the bias is like. Here's the thing. I guess this is mainly leading into just because we have an inverse on the higher time frame gap doesn't mean that it's just straight shot one direction. So that's why we got to look at lower time frames to see if there's pullback spots, rejection spots, to help us not only get our setups, but read where the market wants to go. So on the daily, here, wait, let me go to the actual NQ chart. So on the daily, well, wait, that's not NQ, that's YM. Oh, I guess I don't have it. Oh, here it is. So on the daily chart, what do you guys notice? Do I always put my stop loss below the IFEG, or can I put it below the swing point? That's completely up to you. I actually use a hard stop loss, so my hard stop losses are usually 25 to 30 points. But like inside daily bearish FEG, yep, exactly. So right now, when I see that we're inside this daily bearish gap, right? Just because we're bullish on the higher time frame, right? Does not mean, yeah, of course, does not mean that we're just going to fly through this gap, right? We can easily hold. This gap can easily hold. As you can see, it's done here once, twice, now a third time, right? So I know that we all like to use our inverses for bias, but we also have to use our regular FEGs as bounce spots and rejection spots. Exactly. We need to wait for the IFEG. So here's a prime example of this. Let me show you this. So you see, and this is the daily, so keep in mind, right? So look at here. And remember, this is all fractal, so it will work the same on the higher time frame as lower time frame. But what do we have on the daily? A sweep right here, right? We have a sweep. Then what do we have? Delivery. Then what do we have? FVG size. And what would be the target? Well, the swing low. Okay. But see how we got the inverse here on the daily? Then what happened? Right? What, do you actually want to come speak? Oh, okay. Then what happened? It pumped up. Why? Well, probably because we bounced from a lower time frame gap that we didn't see. So it's not, you can't just use one time frame, right? You got to scan your time frames and make sure that you see where we're bouncing from. Let's see, where did we bounce from? Okay. So we basically bounced from this 30-minute. Right? So it's not random, right? Like it's not random that we got the daily inverse and it didn't just dump. It's not random. You have to scan your time frames and see what else is to the left. So just because we get a daily inverse doesn't mean, oh man, we're bearish to the low, and that's exactly what's going to happen, right? You got to look at other time frames because we can easily bounce out of any time frame. Shit, we could get a daily inverse and have a 1 minute gap hold and send price. Like, that's just the way it is, right? So, yes, we can use it to guide us, but you can't just marry it, if that makes sense. It's not super just cut and dry. Like, use it as a tool, use it as guidance, but it's not just plain black and white. Oh, we inverse that, now we're going there. You got to look other time frames. That's why for our actual trade setups, right? That's why we say, oh, okay, well, watch out for these gaps to the left because we could reject from there. It's no different than when you're trying to find the bias. Because we could easily hold or reject from any other gap to the left. So just be sure to scan multiple time frames. Other than that, it's pretty simple to follow. We inverse this 4 hour, where'd we go? The highs. We inverse this 4 hour, where'd we go? The highs. It's pretty consistent, but obviously it's good to check on lower time frame if you're going to be actually looking for entries. Now, just to prep for next week, right? What are we inside here again? We just said a daily bullish for value gap. Well, let's say we inverse the daily. What am I going to think? That we're bullish to the all-time highs, right? Also depends on what kind of trader you are, whole day traders or session traders. Yeah, exactly. So if you're only going to be like trading one session, maybe you only use the 15-minute. Maybe you don't even bother going on the higher time frame because 15-minute is probably going to be more relevant to your intraday trading rather than long term, if that makes sense. So like for us as traders, when we're just trading our AM or PM session, right? I feel like most of the time we're looking at 15-minute or lower when we're trying to actually find a setup, right? We might go into the day using 1 hour, 4 hour to try and get the overall bias. But for our setups, we have to zoom in on the lower time frame because we could be rejecting or holding on any time frame. So yeah, it also definitely depends on the kind of trader you are. That's a good point. But what I was saying is, if we do inverse this daily, I'm going to assume we're bullish to all-time highs, right? But what else do I have to do? I got to zoom in time frames and see if there's somewhere else. So look at this. There's this bullish gap or bearish gap right above the daily gap, right? But you don't see this gap on the daily. You see it on the 4 hour. So just because we inversed this daily gap does not mean that we'll inverse this 4 hour, right? Let's see. One sec. What if we inverse daily gap on NQ but not on ES? Does that play into anything or no? It could. I would say it's definitely something to keep an eye on. But as far as that goes, I'd be more focused on watching for SMTs rather than higher time frame inverses. For Monday, we can see if price will test the 4 hour bullish FEG before moving higher. Yeah, that would be nice, right? So we left this 4 hour bullish fair value gap here. So hopefully we don't have some crazy gap up or gap down over the weekend. And then we can generate some buy side maybe, get a pullback into this 4 hour and look for longs to all-time highs. That would probably that's probably what I'm looking for anyway. So what am I going to think though if what that is not how it looks on Okay, so on NQ1 we've already tapped into this gap up here, but on NQH we haven't. So that's annoying. What if we pass all-time highs? How do you read the market then? I have been bullish. Like, you have to just stay bullish. If either indice is at all-time highs, just stay bullish. But how do you invalidate that? Let's look at the NQ chart. Well, I'm going to use this chart because I don't like this one. If this 4 hour / daily gap holds, right, and then NQ decides to inverse this 4 hour gap down, what am I going to think? We're bearish? Exactly. So if we inverse this 4 hour gap down, I'm going to say, okay, now I feel like we're probably going to go after these lows rather than all-time highs. right? And when we also have a end log down here that has not been touched. So I would not be surprised if this gap does hold. We do get a pullback, maybe tag this end log down here, then start working our way up to all-time highs. But, that's 500 points down. But with the way we've been moving lately, I wouldn't I wouldn't put that past NQ to do something like that. But yeah, that's pretty much it, honestly. Other than going over news real quick. Unless anybody else has anything to add. It's really just making sure you alternate time frames. I don't know. I'm sure all of us have gotten wrecked on inverse setups because we didn't check all the time frames and got caught in a gap that we didn't see. Has that happened to anybody? Yes. That was my whole week. Okay, well, it's the same thing as trying to find the bias, right? It's the same thing. You could be like so sure on your bias because we inverse this 1 hour, but then we hit a 15-minute gap and it rejects. So don't let that happen to you with the bias. Scan your time frames. Cool? Heard, Chef. All right, let's hop on Forex Factory real quick to do a quick news overview for next week. Monday, nothing but yellow folder, 10-year bond auction, meh. So nothing really. In fact, Amy mentioned this earlier because she's mega duper super smart, that Monday might be a be careful trade day, because we do have CPI on Tuesday. So Monday could be a be careful type of trade day, if that makes sense. Like, obviously, if you see something you like, then do what you got to do. But yeah, Monday be careful, Tuesday full port gamble, CPI candle. That's essentially the plan. Copy trade, every account. So so Tuesday we have tentative ADP weekly employment change. Doesn't say when. CPI. Then we have home sales, which honestly sometimes home sales does kind of have a reaction. And then Wednesday we have PPI. We also have crude oil inventories, which if you're a crude oil trader with all the Venezuela stuff happening, crude oil inventories could be like fun to trade. I don't know. I don't know too much about crude oil. Also, Monday, make live account with Grammy's Life Savings. Tuesday, full port fresh. Okay. I just know that for me, I'll watch how open in the first 15 to 20 minutes plays out on Monday before I consider any setups. Yes. Monday may be a watch the first 30 minutes kind of day. That's probably the better way I should have said it. And then Thursday, we have unemployment claims, which I feel like that reaction's been kind of weak lately, but yeah. And if you're gonna get accounts to full port for CPI, definitely go to Lucid and use code OKNQ because they have no news trading rules on evals or fundeds. Shout out to that. Grammy doesn't trust people on the internet. So looking at this now, though, real quick, I think my short term thing will be this 30-minute. So if we close below this 30-minute, I'm gonna probably expect a retrace into the 4 hour. All right. But I think that's gonna do it for me, you guys. And I'll see you guys on Monday. Thank you for being here. Appreciate y'all. Hag W. I haven't seen that in a while. Anybody have anybody's friends used to write hags in their remember the phase where everyone would write hags in your yearbooks? Have a good summer. Yeah, that is way that's way more efficient for sure. All right, everybody. I'll see you later. Have a good weekend.